once again, good evening. I'm Rakhi Gautam from greytHR, your moderator for the session today. I welcome you all today to our 74th Ask the Expert webinar, Parichay. And as you all know, the topic for today is old versus new tax regime. Now, before I dive into the topic, let's do a little housekeeping on how the session goes. So the session is divided into two parts. The first part will be the presentation by our expert, which will then be followed by an audience Q&A. So I can say this for all, that audience Q&A is where time is all yours. You can, in fact, start putting across your questions from now on. And there could be a few questions that could be answered in the presentation itself, or if you have any specific questions, we will take that all towards the end. Also, as informed earlier, the session is currently being recorded. So if you happen to miss out on anything, do not worry at all. We have got you covered. We will share the recording with you once it is done. And also, this session will be available on greytHR's official YouTube channel. So you can always go there and watch it later. Now, I think without any further delay, let's start the session. So in this session today, we will provide you a comprehensive overview of both the regimes, highlighting the key deductions and exemptions available under the old regime and the standard deductions introduced in the new regime. We will also explore critical factors to consider while selecting the most suitable tax regime for your financial situation. So whether you are an individual taxpayer or a financial professional, this webinar will equip you with the knowledge to make informed decisions and optimize your tax liabilities. Now, again, I talked a lot of things, right? So to decode all of that and to share his insights with us, joining us today is Mr. Amaranath AS, co-founder Arush India. So a lot of you who are our regular, webinar participants, you would know Amaranath very well. He's been to a lot of sessions before, and he's always given us great insights. So let me quickly introduce you to him, those who are new here. Mr. Amaranath has around 19 years of experience in the fields of NRI, HNI taxation, US tax, and labor law consulting. He started his career in the International Executive Services Division of KPMG Global Services, where he worked on US tax returns and related compliances for expatriates. Prior to starting his firm, Amaranath worked in the global employer services practice in Deloitte, Bangalore. His expertise includes various facets of global mobility like expatriate tax, social security, PF implications on international workers, ESOPs, immigration, assignment structuring, etc. So I can say we've gotten the perfect person with us today. So once again, I welcome you, Mr. Amaranath, and we are very excited to have you join us today.
Thank you, Raki. Thank you. So good evening, everyone. Let me share my screen here.
Sure.
Is my screen visible, Raki?
Yes, you can.
So thank you, Raki, for such a wonderful introduction. So good evening, everyone. So as Raki already introduced me, I don't think any further introduction is required. Let us delve into today's topic. So it is old versus new tax regime. Which one fits you? So let me correct you, or let me give the understanding here that there is no straightforward answer for this. Each and every individual's case could be different from the other person. So it requires a comprehensive calculation and see which one suits you better. So you may have a question like for tax return, it's a tax return compliance season and July 31st is the due date for us to file the tax returns. So how will I choose this? Is there a shortcut for me to decide this? I would say that there is no shortcut, there is no straight answer. However, there are certain calculators available online portals, and also incometax.gov.in. Income tax website also has a calculator to decide which one is more beneficial. Please use those calculators to arrive at the thing, and also while filing the return also you have an option to look into the impact between these two, so then you can decide. So before looking at the old regime impact and the new regime impact, do not choose the one if you think that okay, this may be beneficial for me, but actual calculation sometimes works out differently. And from 2023 onwards, there have been significant amendments. This is the first year post amendments of the new tax regime, where the slab rates have been relaxed and also the tax rates have been reduced. So in many cases, what I am seeing even in my clients' cases, new tax regime is scoring well. In a way, majority of them are beneficial through new tax regime. However, as I said, it's a precautionary, it's a caution that please look into the old tax regime as well to see the impact and then decide on that. So let us see how, let us recap. See, as I said, prior to 2023, the new tax regime was little different. And from 2023-24 financial year onwards, significant changes were made. So let us recap how was earlier and what made this to be changed to this extent. So this was first introduced in 2020, applicable from the financial year 2021, whereas there has been a new tax regime was introduced, whereas certain exemptions or most of the exemptions and deductions were withdrawn under the new regime. And also but the benefit which was given by the government under the new regime was to relax the slab benefits or reduce the tax rates to make it more attractive. So what is a major difference between these two? The old tax regime, as we already know, there are Chapter 68 deductions available under the old tax regime. And also, like, there are certain exemptions. It could be house rent allowance or leave travel allowance, whatever those kind of exemptions, majority of them are there in the old tax regime. So if a person wants to look into, wants to maintain the receipts, wants to avail the exemptions, or person who is more towards tax savings or increase his saving instruments as a whole, the old regime may still be beneficial. However, a person who is not much of into the, especially the new joinee who is having a new joinee or a person who is falling between 10 to 12 lakhs kind of a thing of a salary bracket, the old tax regime may still be more beneficial, or sometimes he may think that, okay, I do not want to maintain any of these receipts or documents. So let me just see the simple way and just go to the new tax regime and don't declare anything. No headache of maintaining any receipts or submitting proof to the employer. Let me just avail the new tax rates of the new slabs. So this is what it was, and the main objective to introduce the new tax regime was to simplify and rationalize the tax laws. As we know already, there are different types of exemptions and deductions available, and each comes with its own rules and conditions. When you look at HRA, the conditions are very different, and LTA, the conditions are very different. So as an employer, it is a big headache for you also to maintain or to remember these things. And also every time the employee may question you that why is this is like this, why is like this. So it is very difficult for us to convince them also, because tax laws comes with certain set of assumptions where there may not be any rationale, or we may not be able to appreciate the rationale. So it is very difficult to convince the employee as well as to why this provision is like this and why it is not like this. So it is lot of documentation requirements. The documentation requirements also differ from one exemption to another. Taking HRA as example, maintaining rent receipts, rent agreements, submitting them to employer, and finally, if the salary is on the higher side, he may not get any exemption at all, or it may be very minuscule exemption which he is going to get under HRA. So to remove all these practical difficulties and to make the tax law simpler, this new regime was introduced. So what are the main features of this new regime? Still, we are under the recap only. So first two slides I have provided the recap. Then we will come to the amendments, what happened in 2023. So under the new regime, the exemption towards following allowances were taken away. That is, this is not available. One is leave travel concession, then house rent allowance. House rent allowance is very common thing which we see in case of employees, where most of them may go for the house rent allowance. Then allowance for income of a minor child under clubbing provisions. This is very rare cases. Then most of the allowances prescribed under section 1014 were also taken away. I mean, there were no benefit given for those exemptions. Then apart from these exemptions under Section 10, there were certain deductions were also taken away by the tax laws under the new regime. One is the standard deduction of 50,000 for salaried employees. This is prior to 2023. Again, it was introduced, but we will come back to that at a later stage. So in 2020, when this scheme was introduced, even the standard deduction was taken away, which was available under the old regime to the extent of 50,000 rupees. Deduction for entertainment allowance. Entertainment allowance deduction was available only for the government employees, so not relevant for the private sector. Then professional tax paid, which where that is 200 rupees per month if the salary exceeds 25,000 rupees. So this even the deduction towards was not available. Then the important thing is interest on housing loan in case of a self-occupied property. If the property is self-occupied and if you have a housing loan, there was an interest deduction available to the extent of 2 lakhs under the old regime. It is still available under the old regime, but that deduction was also taken away. See, if you are paying a rent, if you do not own a home and if you are paying a rent, you were getting HRA exemption, even that is taken away. To make that parallel with the person who is owning the house, even this 2 lakhs deduction towards housing loan interest was also made not available under the new regime. So deduction for family pension, which is 15,000 rupees or one third of the pension amount, very small amount, and this is only for the pensioners, and it's a family pensioners. So then all major deductions under Chapter 6A, where we get this ATC deduction towards that 1,50,000, all those deductions were made not available. And there is another deduction, contribution to NPS, and here you just need to pay attention that it's only employee contributions under new regime for NPS is taken away, which is ATCCD 1B. 50,000 rupees additional deduction in addition to ATC, which is 1,50,000. This 50,000 was given addition to that. So that is being taken away. Whereas the employer contribution to NPS is still available under the new regime also. And ATC is a basket of exemptions or deductions like life insurance premium, housing loan repayment, tuition fees, PPF investments. Then 80D, medical insurance premium, even that is not available under the new regime. Then if you have made any donations to charitable contributions, there is a deduction available under Section 80G under the old regime. Even this is not available. Then other deductions like any other like the disability, the 80U, where you are maintaining a disabled person, or if you have a dependent which is with a specific diseases, those deductions were also taken away. So then you may specifically ask like what is available? Is there anything which is available under the new regime? So as I mentioned, the employer contribution to NPS is allowed as a deduction under the new regime as well as old regime. The following special allowances are exempted even under the new regime, though it is under Section 1014. One is transport allowance granted to a Divyang employee for commuting between resident and office. There is 3,600 rupees deduction available for Divyang employee only. So this is available under new regime. So conveyance allowance granted to meet the expenses of official nature. So if you have an office assistant who is commuting between one place to another place for office work, and if you pay any conveyance allowance to him, even that is exempt under new regime. Then allowance granted to meet the cost of travel on tour or transfer. This is basically under Section 1014 for business travels and transfers. It could be even domestic or international. So if you're given any allowance to meet the travel cost or the food expenses during that transfer or during the tour days, then that is considered as official expenses and allowed as a deduction under the new regime. So rebate under Section 87E is still available under both the regimes. So then what changes were brought in 2023 and why these changes were brought? See, they tested this new regime for 3 years, and because of whatever reasons, because of the rate of taxes or any other reason, this was not that successful. When you look at the any survey revealed that only 28% of employees or population was going for new regime, whereas the balance 72% is was under the old regime only. Then that clearly shows that this is not attractive. And the purpose is what? To make it simplification, to bring in simplification in the tax regime, and that purpose is not met at all. The whole objective or the purpose is defeated in a way, or not that successful. So then the government relooked into the new regime and brought in various amendments to this new regime to make it more attractive and to push the people to go towards the new regime. So one is what? The new tax rates and slabs. Of course, we will see this in later part of the slides, how the tax rates have been impacted and what changes they brought in the new regime to make it more attractive. So it is not only the tax rates, even the slabs are relaxed, so to make it more attractive. Then the standard deduction, which we saw, which was withdrawn under the new regime, which is 50,000 rupees, was reintroduced under the new regime for to bring in the standard deduction. And also the standard deduction, not only in the case of salaried employees, but also in the case of pensioners, also in the case of family pension. Even for the family pensioners, this deduction was not allowed. Then they brought in for the family pensioners as well to the extent of 15,000 rupees, or one third of the family pension, whichever is on the lower side. Then tax rebate increased to 7 lakhs. So what does this mean? See, earlier, when you look at the old regime, even today, and even for the new regime earlier, the tax rebate was available up to 5 lakhs only, but only in the new regime, this was increased to 7 lakhs. So, I mean, and also like the 50,000 is the standard deduction. So, in case of a salaried employee, unless and until his salary exceeds 7.5 lakhs, there is no requirement to pay the tax at all. So as long as it is less than 7.5 lakhs, you can straight away say that there is no tax impact for this employee. No need of taking all the proof, I mean, the proof submission is not applicable to those employees. And also you can straight away say that there is no tax impact. So 7 lakhs is the basic rebate or relief, plus 50,000 is the standard deduction. So that's how this 7.5 lakhs is arrived at. Then the next piece of change is the surcharge. So highest surcharge under the old regime was 37% if the income crosses 5 crore rupees. And this was brought down to 25%, a significant amendment and a significant savings, I would say. Earlier, if you take even in the old regime today, if the total income crosses 5 crores, the maximum marginal rate comes to around 42.75% with 37% surcharge, which was brought down to 25%. So, which is made at par with the individuals drawing more than 2 crores of total income, having 2 crores of total income. So now the maximum marginal rate is only 39% for both exceeding 2 CR or 5 CR. So in a way, if the total income is exceeding 2 CR, I would say that always the new regime is beneficial because the surcharge is capped at 25%, whereas if it is more than 5 crores under the old regime, the surcharge is at the rate of 37%. So if your income is crossing 5 crores, then needless to say that the new regime is more beneficial. Then another significant amendment is new regime was made a default regime. Earlier, it was the old regime was the default regime, but from 2023 onwards, new regime is the default regime. What does this mean? This means that if you do not opt for any of the regimes, then by default, the tax calculation happens under the new regime. So if you want to make it old regime, then you have to go and choose the regime which you would like to go for, which is the old regime. Otherwise, by default, it is new regime will be calculated. Even in the tax returns, this is how it is being configured. So if you really want to go with the old regime, please make sure that you specifically go and select the old regime. Otherwise, by default, the new regime will be applicable and the tax also will be computed under the new regime. Yeah, as I mentioned, this is the tax rates under the old and new regime. So if you look at the old regime up to 2,50,000, it is nil rate of tax. 2,50,000 to 5 lakhs, 5%. 5 to 10 lakhs, 20%, and more than 10 lakhs, it is 30%. The rebate is available up to 5 lakhs only. When you look at the new regime, the basic exemption itself is 3 lakhs, whereas the old regime starts from 2,50,000, whereas in the new regime it is 3 lakhs. 3 to 6 lakhs 5%, 6 to 9 lakhs 10%, and 9 to 12 lakhs 15%, 12 to 15 lakhs 20%, and more than 15 lakhs 30%. So how this got changed to these numbers? See this here I have given the comparison, like under which brackets the tax rates were reduced for and as it compared to the old tax regime. When you look at the the second, third, and fourth columns, it is applicable for the financial year 22-23 as well as 23-24 under the old regime. But the next two columns are under the new regime. Let us see 23-24, what is the impact. Old regime, there is no impact, but when you look at the new regime, there is two different rates are applicable. When you take the example of 5 lakhs to 6 lakh person, old regime tax rate is 20%. New regime tax rate prior to 2023 amendment was 10%, but now for 23-24 it is 5%. See, there is for this 1 lakh rupees under the new regime, the saving is 15,000 as compared to old tax regime, because under old tax regime this is taxed at 20%, whereas under new tax regime it is taxed at only 5% for 23-24. Similarly, 7.5 lakhs to 9 lakhs, old tax regime it is taxed at 20%, whereas under the new tax regime it is taxed at 10%. Then 10 lakh to 12 lakh, under old tax regime 30%, here it is 15%, 50% reduction in the rate. So for 2 lakhs, if you calculate 15% as a saving, it is the tax saving is 30,000 here. So 12.5 to 15 lakhs, then under old regime it is 30%, whereas under new regime for 23-24 is only 20%. So this is how the rates were reduced and also the slabs were relaxed significantly, which results in a which makes the new regime more attractive and also results in a tax saving. So after seeing this, you may be wondering, okay, anyway, new regime is more beneficial when you look at the tax rate. So let us go for that. But that's not true in in all the cases. So I have given here a comparison table for you to simplify this regime, how to choose this regime. So say for example, the income levels is the first column represents income level. The second column break-even deductions or exemption limits, including standard deduction. So the second column is basically gives you if total of your exemptions and deductions, including standard deduction, if it is more than the number which is given here, then old tax regime is beneficial. Otherwise, new tax regime is beneficial. So taking an example of, say, for example, 10 lakhs is the income. So if your deductions and exemptions including standard deduction, if it is more than 3 lakhs, then you are good to go with the old tax regime. Otherwise, you can straight away say that the new tax regime is more beneficial. But one caution point here is when I say deductions and exemptions, it includes even HRA, LTA, all these exemptions as well. So you may not be having complete visibility with respect to your exemptions. So please go to your payroll tax statement, which gives you these calculations, and then arrive at the total deductions and exemptions first, and then see your income limit, and then finalize which regime is more beneficial. This you can keep it as a reference for you to check whether which tax regime is beneficial, more like a shortcut. But again, like your calculation with respect to deductions and exemptions should be correct if you would like to go with this. When you look at the 15 lakhs income level person, see the break-even deductions or exemptions is 4 lakh 8,333. So if your deductions and exemptions are more than 4 lakh 8,333, then old tax regime is beneficial. Otherwise, it is new tax regime. But once it crosses 15.5 lakhs up to 5 crore, the break-even point is only 4 lakh 25,000. It remains constant. So if your exemptions and deductions are more than 4 lakh 25,000, then your old tax regime is beneficial. Otherwise, new tax regime. And above 5 crores, as we already discussed, due to surcharge impact, which has been reduced significantly under the new regime, which has been brought down to 25% from 37%, new regime always beneficial. So now comes the employer obligations with respect to this regime. Of course, this may not be that relevant topic for today's discussions. Just I would like to give a brief idea about this. So option to elect may be given by the employer. So at the time of in the month of April, at the beginning of the year, an option should be rolled out by the employer. If an option is exercised by the employee, obviously the employer has to go with that regime. But if no option has been exercised by the employer has to go with the new tax regime because that is the default regime. So if an employer has not chosen an option, then the employer is obligated to take the new regime is assume the new regime is beneficial and go with the default regime of new tax regime. And once the option is exercised, cannot be changed for TDS purposes during the year. However, he can still change at the time of filing the tax returns. For salaried employees, there is an option given at the time of filing the return. Uh, Irrespective of whatever option has been chosen by the employee for payroll purposes, he can relook into that calculations and he can go for the one which is more beneficial. So he can change it. So for payroll purposes, he might have chosen new tax regime is more beneficial and opted new tax regime. However, later after receiving the Form 16, he may realize that, oh no, old tax regime is beneficial because of my exemptions or deductions. So then he, at the time of filing the return, he can change it. However, for payroll purposes, I mean, the circular does not give the option for the employees to change during the year for payroll purposes. But I mean, there is no specific logic, as I said, tax rules and the logic doesn't go hand in hand. But I see practically many companies are still giving the option of changing for payroll purposes as well during the year. However, the circular does not specifically grant this permission, and I have not seen any tax authorities objecting this as well. So practically, you may take a call that this is still okay kind of a thing, but if you still really want to go with the law, that option should not be given to the employees. Yeah, today's session I kept it to a small extent. I mean, it's only 25-minute session I kept to answer more questions and to give time for questions. So let us see what questions are there for today.
Sure. Thank you so much, Mr. Amaranath, once again. That was very insightful, very detailed, in fact. And I'm sure our audience has taken down their notes on this. Now, we will, as Mr. Amaranath suggested, we are going to take all the audience questions. We have 30 minutes with us. So let's make the most of it. I already see some questions lined up. So we'll take them one by one and we'll get your question answered. Okay, so I will come to the question just a moment. Okay, so the question from Uma is, of course, a lot of questions might have been already answered in the presentation, but we'll just do a recap. So the question from Uma is, if the new regime affects the current TDS deduction or not?
New regime affects the current TDS deduction. I'm not able to decipher the question, what exactly they are asking here. Affects the current TDS deduction or not? Definitely, it has an impact on the TDS to whatever the option chosen by the employee, you have to go with that. If he is not opted for anything, then by default, you have to presume that it is new regime and then go with the deduction. Since the tax rates and the tax slabs are different between old regime and new regime, definitely it affects the TDS deduction. The amount of TDS to be deducted from the employee has a significant impact under both the regimes.
Sure. Thank you so much for that answer. Next question is from Sachin K. Whether the top-up loan taken based on earlier home loan also get considered for TDS deduction? If yes, then how much amount and under which section or subsection would it come?
Yeah, so see, top-up loans, it depends on the purpose of taking the loan. There are two things which I generally come across with. Top-up loan, one is for the repairs or renovation work, or the top-up loan is for a new construction. Maybe you may decide to construct one more floor on your home and you will go for the top-up loan. In these two cases, the implications are different. If you are constructing a new home, then I mean, in both the scenarios, the interest paid on the top-up loan is considered for TDS deduction. There is no doubt about it, or there is no limits as such. Like whatever prescribed by the tax laws is the same for TDS or for the return filing if you are filing the return. how much amount you see, if it is for a renovation or a repair, the maximum deduction for interest paid on the top of loan is only 30,000 rupees. But if it is for a construction of the house, new house, then it is 2 lakhs for a self-occupied property. But if it is a let-out property, then there is no limits, whether it is for renovation or repair, or it is a construction. If the property is let out, you can claim 100% of the interest amount. But in case of a self-occupied property, only in case of renovation or a repair work for the top-up loan, it is 30,000 rupees.
Next question is from Asha. Can we change the regime during filing of taxes?
Yes, of course, yes. For tedious purposes, you might have opted for one regime, but later on you might have realized that the other regime is more beneficial. For filing or at the time of filing of tax returns, if you do not have the business or professional income, then you can change year on year. And in the same year, you can change as compared to the payroll purposes, whatever regime you have given. There is no mandate to follow at the time of filing the tax return. You can change at the time of filing the returns.
Okay. Next question is from Ravi. Is it possible to revert the old version after having switched to the new one? I think regime instead of. So, is it
Yeah,
possible
yeah.
to revert to the old?
Yeah. See the rest, yeah, for salaried individual or for a person who does not have a business income or professional income, he has option to change the regimes year on year. So this year maybe you can go for new one, next year you can go for the old one, again you can change it back to new one. However, if a person is having a business income, then for him there is only one time option to move into the new regime, move opt for the old regime. And once he has opted for the old regime, again he can come back only once in a lifetime for the new regime. By default, it is new regime, so he can switch back to old regime once, and he has to stay with that. But if he wants to come out of it, he can come out in the future, but again he cannot go back to the old regime. So for business income, there are restrictions in switching. Whereas for non-business income, that is for salaried employees who does not have any business or professional income, you can switch year on year any number of times.
Next question is from Swami. Is there any last day for paying the contribution of MPS, which is deducted from employees for employer?
Okay. So this is not directly related to today's presentation, but anyway, I will answer your question. See, as per law, there is no specific date mentioned for NPS contributions. However, it depends on the agreement with the custodian, your custodian or a banker with whom you have the NPS account. If the agreement with them specifies that within such and such date you have to remit the funds, you have to remit that. Otherwise, at least within a reasonable time, you should ensure that you are remitting the contributions to the employee accounts.
Next question is, can an employee change regimes? Can an employee change regimes multiple times while declaring IT declaration to the employer?
Yeah, can an employee change regimes multiple times? While yeah, see this also I answered. As per law, as per the circular, it does not grant permission as an employee to change the regimes multiple times while for IT declaration purposes. But having said that, many companies give the choice to the employees to change that. So practically, it makes sense to give that kind of an option to employees. Since practically, I mean, it is an employer choice. If he wants to extend that benefit to them during the year, he should be allowed to do that. Even if the companies where they are doing this, where giving this option, I have not seen any objection from the tax authorities not to give this option to the employees. So in that way, practically, yes, it is visible, but theoretically, the law does not permit this.
I think a lot of people have the same question. The next question from Suhas is also the same. Can one choose a new regime
Yeah,
now and change the old? So I think the answer is the same for this.
correct, correct.
Okay, moving on. From Ramanath, the question is, if the housing loan is let out property, is it available under the new regime? And if yes, what is the limit?
In case of let out property, there are no restrictions. I mean, there is no limit also. The deduction is available under both the regimes, new as well as old. The amendment or under the new regime, the restriction is only on the self-occupied property, which is the deduction of 2 lakh rupees on the housing interest is not available on the under the new regime, only for self-occupied property. For let-out properties, there is no limit and available under both the regimes.
So the next question is from Kavita. For the financial year 24-25, are there any changes in the new tax regime?
So this is a good question, interesting question. So all of us are waiting for this because this year's budget is not yet come. The whatever the budget we saw in the month of February was the interim budget, which did not talk about much changes. So in couple of weeks' time, the final budget for 2024 is coming, 24-25. So we just need to wait and watch if there are any amendments with respect to the new regime by the finance minister.
Again, there's a question which is very specific. As when you started the session, you said that there's nothing like, best regime or right regime for you. It depends on, the kind of deductions and exemptions that you have with both. So, but the question is, I will still read out if you have any suggestions. From Ashitod Thorat, can you please explain briefly what would be the best regime for an LP of 11.5?
Yeah, as I said, when you look at my slides, 11.5 lakhs. So it is 11 lakhs tax, 11 to 12 lakhs tax bracket. So 3 lakh 25 is the cutoff amount which I have given. So, or maybe you can just take it as 3.5 lakhs. So if your total exemptions and deductions is more than 3.5 lakhs, then it is old tax regime is beneficial. Otherwise, you can go for the new tax regime. This is more of a reference kind of a thing which I have mentioned here.
There is a feedback actually from Rajesh. Thank you. It's crystal clear. I think one of the
No, thank you.
responses that you said. Okay,
Thank you.
thank you so much, Rajesh, for sharing your feedback. Moving on to the next question from Govind Raj. Is there any limit for car?
Carlease.
Is there any limit for car lease as per income tax rules?
There is no limit for car lease as such. However, looking from a practical perspective, for a lower salaried employees, giving a higher car lease amount does not make any sense, and also the entire arrangement may be questioned by the tax authorities. So many companies, what they do is, based on the level of the employee and their salary level, they fix the car lease amount. Say, for example, a person drawing 10 lakhs of salary, the car he may go for maybe around 5 lakhs or 6 lakhs, or a lease amount of 6 lakhs to 8 lakhs. Like this, they mention. And the car lease, the income tax rules per se will not give any restrictions or any limits on this. But practically, to make it viable, you should decide on the level of the employee and also the level of income which he has in the company. This is, you can make it according to the industry standards in the policy of the as a company policy.
Got it. Next question is from Jean Michael. For LT exemption, what is the maximum limit for a year?
For LT exemption, again, there is no limit specified. As far as I know, the industry standard, if you want me to talk about, it is generally 1 to 2 months of basic salary. So there is no limit prescribed by the tax laws.
Next question is from Janvi. Is Section 80G considered under the new tax regime?
No, deduction under Section 80G is not available under the new tax regime.
Next question is from Kausalya. Above 12 lakh, which regime is the best?
Yeah, as we already discussed, it covers that. So 3,50,000 is the benchmark for 12 lakhs. So if your total exemptions and deductions are more than 3.5 lakhs, then the old regime is beneficial.
Next question is from Abbas. I have already opted for the new regime and received Form 16 as well. Can I change it now?
Yes, you can change it at the time of filing the return. So now you do the calculation, and if you think that old regime is beneficial, you can always change it in the tax return.
Okay, the next question is from Samruddhi. Again, the same question about changing the regime. So as Mr. Amaranath said, that can be done. I will move on to, again, Pradeep Rana also has the same question about changing the tax regime. So we covered that. Moving on to a question from Govind Raj again. What is the tax rate if PAN is inoperative?
If the PAN is inoperative, then the tax TDS amount should be at the rate of 20% plus education cess of 4%. So it is 20.8% is the maximum rate. If the person is falling under 30% tax bracket, then you have to do it at the rate of 30%. It is actual slab rate or or the highest maximum marginal rate or the 20.8%, whichever is higher. And there is no basic exemption or these things which you could give if the PAN is inoperative. So please educate your employees to make it operative as soon as possible.
Next question is from Monica. Can we take deduction of interest and principal amount of loan on house property under new regime?
Yeah, we already discussed this. See, if it is a let out property, yes, you can take it. But if it is a self-occupied property, no deduction would be available for interest as well as principal.
Next question is from Ravi. Are there any specific benefits or deductions available only in the old tax regime?
Yeah. So as I said, if you go back to my slide, let me just present that. See, these are the deductions which are available under the old, under the new tax regime. One is employer contribution to NPS, then conveyance allowance or a transport allowance given to Divyang employee, and conveyance allowance for office expenses, and then per diem amount given on a 2-hour transfer, that is also available as exemption, and then 87A rebate. Apart from this, no deductions or exemptions available under the new regime.
Okay. Any specific benefits or deductions available only in the old tax regime?
Sorry, these are the specific available under the old tax regime.
Okay.
And whereas, sorry, any specific available under the old tax regime. Sorry. So, see here, old tax regime, whatever was available, whatever we discussed as not available here, all are available under the old tax regime. So, just to put under the list here, see, these are the deductions available, and then these are the exemptions available under the old tax regime. Basically, all the exemptions and deductions are available under the old tax regime.
The next question from Hari Krishna. I think you have partially answered this, but what are the allowances can be considered under old tax regime, and FBP allowances can consider for TDS?
Yeah, we discussed this, right? I mean, whatever is prescribed under the income tax rules and regulations, all those allowances can be given.
Next question from Shubham. I think we just discussed this now. What are exemptions allowed in new tax regime, like fuel allowance, washing allowance, internet allowance, gadget allowance in old tax regime? If yes, can you specify the limits specified by the IT department?
See, out of the allowances listed here, only one allowance, which is, there are two allowances which can, see, here washing allowance is not available under the new regime, whereas fuel allowances or internet allowance and gadget allowance, all these three are available under the new regime, provided you make this as a reimbursement, and you should not pay as an allowance straightforward. If you are giving this as a reimbursement after collecting the supporting document, then fuel allowance is also available. Then internet allowance is also available as a deduction. Gadget allowance is also available as a deduction. And for the limits for this is fuel allowance. Basically, like if the car is owned by the employee, then it is 1,800 rupees per month for a smaller car and 3,600 rupees for a bigger car. There are two types of cars as per the regulations. So based on that, it is allowable. Internet allowance, there is no specific limit provided. So whatever is reasonable, you can provide that. Especially if it is a work from home, I can understand that their internet costs may be on the higher side. So you can accordingly set the limit for the internet allowance. But anyway, the supporting must be collected. The gadget allowance is a name which is coming in the market, but actually it is not an allowance. It is basically a gadget is being bought on behalf of the employee by the company and given it to the employee. So the rules for this is really different. So you can look at the rules and accordingly draft the policy for gadget allowance. There is no limit specified basically for gadget allowances.
This also be discussed from Muhammad Shabu. Can I switch regime while ITR filing, suppose this year in new regime and
Yeah,
next year as old regime?
yeah, we can.
Next question is, are employees submitted the IT declaration in any month like May, July, etc.? Is it allowed to take IT declaration anytime between April to December, or should we only collect it in April?
No, you are free to collect the IT declarations anytime from April to February. I mean, typically including March as well. But if you're collecting March, then the closure of the payroll may be difficult. So practically till February, you can collect the declarations. There is no hard and fast rule that you have to collect only in the month of December or March.
Okay, so next question is from Devita from Dhwani Foundation. Initially, it was mentioned that a new regime tax need not to be paid unless the income crosses 7.5 lakh. But under the slab, it is mentioned 10%. Could you
Yeah.
please clarify?
See, this is what I said. When I say 7.5 lakhs, this should not be confused with the relief. What I meant for 7.5 lakhs is the rebate, not the slab benefits. See, 7.7 lakhs is not the basic exemption. You should not understand it as a basic exemption. This is only a rebate. So if the income exceeds the 7.5 lakhs, say for example, the income is 8 lakhs, then the basic exemption under the new regime is only 3 lakhs. Then you will end up paying from 3 lakhs onwards as per the slabs. But if it is 7.5 or less than 7.5 only, entire income will be exempted.
Next question is from Amber. I am a salaried person. If my salary is 7 lakhs, should I still file the return on that? And should I declare my mutual funds which I hold even if it's for LTCG perspective?
Mhm. So, see, it is not only the salary, you need to look at the total income. If the total income is less than 7 lakhs, yes, I mean, you must file a return as long as your income is more than 3 lakhs under the new regime. So, even if it finally there need not be any taxes due on the return, it is advisable that you file the return. Also, it is a mandate as per the law to file the return if your income is exceeding 3 lakh rupees. So please file the return. And coming to the disclosure perspective, if you have just bought the mutual funds and not sold them, there is no requirement to disclose those mutual funds. But if there is a sale of mutual funds, then you have to report the capital gain or losses which has arisen from those sale of mutual funds.
Next question is from Gaurav Doshi. Convenience allowance under section 1014(1) against the proof. Is it available to new tax regime employee?
No, it is available only to Divyang employees under the new regime and not for all employees. Divyang employees are basically physically impacted disabled persons. So for them it is available and not for the normal employee.
Okay. Next question from Manish Goswami. This also we have discussed. Is there any time limit employer has to set to choose regime by employee?
Yeah, this we have already discussed. Generally, it is taken at the time of joining or for the existing employees at the time in the month of April. And generally, the companies follow the same, and some companies will give them an option to change as well.
Next question from Janvi. Can we change the contribution towards PF in the middle of the financial year or in the next financial year only?
Yeah, you can change the contribution to Provident Fund in the middle of the financial year as well as in the next financial year as well, provided your salary is more than 15,000 rupees. Basic is more than 15,000 rupees.
Naveen Kumar MD is asking if an employee's CTC is 7 lakh, which regime is more beneficial for this employee?
Yeah, as I already mentioned, up to 7.5 lakhs, it is new regime is beneficial. So generally for 7 lakhs salaried employee, new regime is beneficial.
Sure. Also, I see a lot of questions which are repetitive. We have already answered, so I hope you have taken the note of it. You might have asked the question earlier and then it was, answered. So we're not going to repeat the questions now. I think I see a lot of repetitions of old and new tax regime changing. So, okay. There is a question. Okay, there's a question under old regime, if employee has already taken home loan and just a moment. Under old regime, if employee has already taken home loan and interest of home loan is exempted under certain section, an employee is staying in rented home, that can be, then can he take HRA exemption too?
See, this happens when you are in the, like, if you are unable to stay in the house where you have taken a home loan due to the purposes of your employment. Maybe your office is too far off, so you kept the home vacant and you are living in a rented house which is nearby the nearby office or surrounding your office space, and you are paying a rent for that house. In those cases, you can claim HRA as well as the housing loan deduction of rupees up to 2 lakh rupees. So both are allowed only in those cases.
Okay, Ramanath has a question. Is there any section for international worker for not deducting the TDS?
Sorry, is there
So,
a
is there any section for international worker for not deducting the TDS? I think not
not
deducting that.
deducting the TDS? No, no, there is no exemption for them. So you have to deduct the TDS, whether he is a domestic employee or international worker, TDS has to be deducted.
Next question from Shantala. I think this is referred to a point that you made earlier. When you say 4.8 lakhs is upper limit as an exemptions for the package of above 15 lakhs, does it also include HRA, standard deductions, ATC, ATD?
Yes, 4.8 lakhs includes all exemptions and deductions, including standard deduction. Yes.
Okay. Surya has a question. If you could please tell us about the rebate under section at 87A limit.
Please say about rebate under section 87E limit. Okay. See, the rebate works like under the new tax regime. More than, as you look at the slabs, I mean, up to 3 lakhs, there is a basic exemption, and after that, the slab starts 5%, 10%, 15% or so. So, if the income is less than 7 lakhs, new regime gives a rebate up to 7 lakhs, which is up to the income of 7 lakhs, not up to taxes of 7 lakhs, up to the income of 7 lakhs. So if you calculate the rebate is drafted in such a way that up to 7 lakhs, you won't pay any taxes. So that is called as a rebate. Apart from the taxes slabs basic exemption, rebate would be available to certain extent up to certain income levels. Under the old regime, it is 5 lakhs. Under the new regime, it is 7 lakhs. So up to 7 lakhs under the new regime and 5 lakhs in under the old regime, there is no tax implication, which means to say that there will not be any tax impact or there is no liability to pay the tax as long as your income is within these limits. However, as once your income crosses 2.5 lakhs under the old regime or 3 lakhs under the new regime, there is a mandate for you to file the tax return.
Next question is from D. Damodaran. How to resolve the penalty levied for the return filed under Form 24Q for not linking Aadhaar with PAN by the employees?
Yeah, can you read it out again?
Yes. So the question is how to resolve the penalty levied for the return filed under Form 24Q for
Hmm.
not linking Aadhaar with PAN by the
Okay.
employees.
Yeah, yeah. See, this thing came up and a lot of representations were made to the government, and the government extended the Aadhaar linking facility up to May 31st, if I remember correctly. So at that time, we should have ensured that the employees are linking the PAN, and if that deadline is missed, I don't think there is any option for you to come out with that.
Next question is from Krishnan. Sir, I paid rupees 4 lakh college fees for my only son during 23-24. Can myself and my wife can claim rupees 1.5 lakh under section 80C separately?
See, it depends on who has paid the 4 lakhs. If both of you have paid the 4 lakhs and the funds have gone from both of you, then both of you can claim 1.5, 1.5. But if it is only one person has paid, then unfortunately it is only one person can claim up to 1.5 lakhs. At least for this year, you can plan it in such a way that both of you will pay and then take the benefit from this year onwards.
Next question is from Devika. When do we need to collect proof of investment and deductions from employees? Is there any specific month?
We already discussed there is no specific month as such, but in the month of April, you must collect because you have to estimate the tax liability for the entire year, and accordingly, you have to do the tax deduction at source as per section 192. So you have to collect at the time in the month of April, and again, as a one more time collection of proof kind of a thing at the beginning, which is April, employee might not have incurred any of those expenses, but during the course of the year he might have incurred. So one more chance need to be extended to him to provide the proof submission for all his investments at the end of the year, which is December, Jan, February, as per the company's convenience and policy. So apart from this, if you want to extend him multiple times to change the options, you can do that.
Next question is from Ravi. Are there any differences in the tax treatment of capital gains between the old and new tax regime?
Okay. Between the old and new tax regime, there is no change in the capital gain taxation. Whether it is old tax regime or new tax regime, it's the one and the same.
Okay. Uh, I'm just looking for next question. I think there are a lot of repetitions. Okay, this question.
I think there is one from Saumya. Is there any notification from the department saying new tax regime is default tax regime and employer should implement in their salary process? Yes, there is a notification. I mean, it's a circular notification on this where the government says that new tax regime is the default regime. And if the employee has not opted for any of the regimes, as an employer, you must go for the new tax regime only.
Okay. There's another question from Darshan. He says, "This is Darshan. Thanks for the wonderful session. Thank you for your feedback." His question is, most of the employers, they will not submit their employees' earnings in the TDS portal if they have not deducted their income tax. Please let me know whether it is mandatory or an optional.
Thanks, Darshan, for the feedback. But coming back to your question, it is their option to submit the proofs or whatever the supporting documents. But if they have not submitted, you have to presume that they have not done that tax saving investments or they have not incurred that tax saving expenditure. So accordingly, you have to compute the taxes. So there's no hard and fast rule for them to submit the proofs.
Next question is from Kushal. Which documents do we need to submit for HRA? And also, we pay collectively to the owner. So, how can I showcase it?
Oh, okay. See, paying collectively to the owners is a tricky situation. So I would advise that to have a different receipts for if you three, four people are combinedly paying. So your share of rental, you have a receipt for that, your share separately, and then submit to the employer for claiming the HRA exemption.
Okay. There's actually a question for you, in terms of connecting with you for as a financial advisor. So, what I would suggest, the person has not given their name. In the thank you mailer that we will share with all of you by next week, it will have Mr. Amarnath's email ID. So, you can connect with him there, or I will share my email ID towards the end. If you want, you can share your contact with me. I will write it to Amarnath. And in fact, Mr. Amarnath also had shared his email ID towards the end,
Yeah.
his credentials. So all of you can note it down, maybe take a picture. And if you want to connect with him, please do so. I'm sure he'll be happy to help you out.
Yes, yes. This is my email ID and contact number. So please feel free to reach out to me any point in time.
Okay. I'm just going to take a couple of more questions. Okay, let's see. There are a lot of questions, but some are very similar questions that we've already discussed. Okay, so there's one question from Padma Shri. What more allowances we can give in salary components to claim for more tax exemption?
This is a very general question. I mean, unless I see what they have already, I can advise on the what more they can add or delete. So, I mean, as we discussed, all these exemptions and deductions you can give it to your employees.
Okay. You can also, if you want like a specific answer, you want to have Mr. Amarnath's suggestions, you can connect with him on his email ID and phone number, which is available there. A lot of people thanking you for answering their question. I am just, I think we have pretty much covered most of the questions, but
Correct.
okay, I think this question also we covered, but anyway, I see this, so I'll ask. So the question is from Manoj: meal card and telephone internet bills can be claimed under new regime or not?
No, meal card cannot be claimed. Then what else? Telephone, is it?
Telephone, yes.
Telephone can be claimed. Yes. Meal cards is not allowed under the new regime.
Okay. Uh, I think we are again. Okay, there's one question from Naveen. Just give me a moment, I'll read out the question. So the question is, I have income from salary and income from capital gains. I wanted to choose old regime. If I file Form 10IEA to opt for old regime, can I convert into new regime? Can I convert into new regime before
Again,
filing?
before filing. Uh, So I think this is at the time of filing. Maybe I think that he is asking year on year, this year and the next year, whether he can change that before filing. See, first of all, Naveen, you have only salary, income, and capital gains. So filing of Form 10IEA does not arise in your case. But anyway, you can switch to the regimes anytime in the future years. And also in the current year for as compared to the payroll and for the filing of tax return. The 10IEA is applicable only when you have a business income or professional income.
Okay. There's one question, but I can't see that question. Somebody has written, ask, answer my question. I'm just looking at if I can find that question. Um, okay, so there's one question I think a lot of youngsters would want to know. Pradeep Strana question is, can an employee make rent agreement with his or her father or mother's house and pay rent? Can it get tax exempted?
See, one of the conditions for HRA is there has to be an actual payment of rent. So if you are paying rent to your father or mother, and if the house is in their name, then yes, you can claim exemption towards it.
Okay. There's one question from Ankita. Can I opt out of PF in old tax regime? I have been operating PF since start of service. So,
See, PF contribution, opting for PF contributions or opt out from PF contribution is nothing to do with the new tax regime and old tax regime, because this is purely with respect to taxes, and that is the provident fund contributions. And coming to your question whether you can opt out of the PF, opt out of the PF is not available until you are employed with an establishment which is covered for PF purposes. However, you can reduce your contributions to the salary of rupees 15,000 instead of entire basic if you are contributing on the entire basic.
okay. There's one feedback from Rakesh Raghu. That was a great experience with you, and webinar was very helpful for me.
Thank you.
So,
Thank
thank
you.
you so much for your time. Okay, I think we have covered most of the questions, but I understand there could be a lot of other questions, which you might have. So I'm going to share my email ID with you. There's Amarnath's email ID, phone number right there. You can write to him directly, and he will help you with your questions. In the meantime, Mr. Amarnath, I would request if you can stop share your screen. I will
Yeah.
just share my screen
Yeah.
and do this. Okay, can you all see my screen?
Yes, we can.
Okay, thank you so much. So, once again, all of you, thank you so much for taking out the time and joining us. It was amazing to see that we were able to do like a presentation by Mr. Amarnath, followed by such a extensive Q&A round where we took most of the questions. So, thank you so much for your participation, and of course, thank you so much, Mr. Amarnath, for taking out the time and
Thank you,
helping
Raki,
us.
for giving me an opportunity to give my insights, my thoughts on this special topic, and that too a right time. It's a tax return compliance season, so I hope I have answered and to the satisfaction of the participants.
Definitely. I think I can say this for all that this was a very helpful session. As you said,
Yeah,
this is the hot time to do this session.
exactly. Yeah, yeah.
So we appreciate all the insights that you shared with us, and I'm sure this session has done its justice. So to share with the audience as well, we have a Great Tribe community, which is a knowledge sharing platform. So if you have any more questions that you want, to get answered by industry experts like Mr. Amarnath, you can sign up for this community and you can ask your questions there. Anything related to HR, anything related to tax, labor laws, we will be happy to help you there. Apart from this, we are also available on WhatsApp. You can scan the QR code which is there on the screen right now, and any queries that you have related to customer support, promotions, updates, Great HR as a product, you can connect with us there, and we will connect and get back to you, of course. And of course, yeah, thank you so much once again. As promised, I have my email ID here. So if you have questions for me also for Great HR in general, you can write to rakhigotham@greatip.com, and we will get back to you. And as promised towards, in the beginning, that this session is recorded, and this recording will be shared with all of you on your email ID with Mr. Mannath's credentials. So if you want to connect with him, you will be able to do so. So once again, thank you so much everybody for joining in. But before all of you log out, I have one feedback for you. If you can, participate in this feedback poll. I still see some 200 people here. So there are two questions that I wanted to ask. How did you find the session, and would you like to attend similar sessions in the future? So just all of you who are still there with us, you can participate. Let us know. It will help us, improve for the better. And once again, thank you so much for joining us. Thank you so much, Mr. Amarnath, for your time today.
Thank you. Thank you, Raki. Yeah. Thank you all participants as well. Thank you.
Thank you so much. I'm just going to keep it for 2 minutes for all of you participants. I would urge all of you to, participate in this feedback and let us know how you found the session. Just 10% of you are left. Please participate, let us know, and we will try our best to come up with more exciting, more knowledgeable, more insightful sessions for you in the future. Okay, thank you so much. All of you have voted, and once again, thank you for your participation, and we hope to see you in the next webinar very soon. Thank you so much, and take care. Have a good evening.